Today we're going to get into how to architect your prices based on real value and the lifestyle that you want to actually have. So being inside of a business for yourself, a lot of the times we focus on what other people are charging and what other people are doing, and we kind of set those as our standards of doing business, and we just think to ourselves, well, if they're doing it, it's got to work for us too. Well, I want you to scrap that mentality. I want you to throw it into the garbage because it does not work and doesn't apply to professional services. Now, if you're selling products, that's a different story, okay? You do want to remain competitive with those, but you don't really need to base your price off of a lifestyle type of deal. It's based off of value. This right here is the services that you want to provide. You want to be able to build a business around the quality of life that you want to live. So what we want to do is actually give you a 4-part formula to make sure that you can actually deliver that price to your market. And the only thing that's really predicated on this price is your ability to deliver the value. So if you know that your price is justified because you're dealing with higher level clients, right? People with more money, and your products and your services are more money, then what you could do is make sure that in our case, let's say that an average client of ours is selling $15,000 packages. Well, if they buy into our $30,000 per year agency package, then how many sales do we have to get them so that they offset their costs with us? Just 2 sales in a year, right? Well, if we were to get them more than 2 sales, that would be additional profit from their investment. So they would get more of a return. And so when you're dealing with people like that, it's very easy to justify to say, yeah, do you think that based on what I shared you and what my company can do for you, that we can help you get at least 2 sales before the end of the year? Now they're going to say, well, yes or no. If they say yes, perfect, then our company will be paid for it. And at the worst case, you'd have a better opportunity to reach more in your market. But let's say that you're dealing with clients who are selling $100 products. Well, if I'm helping somebody sell a $100 product and they're buying into a $30,000 per year service, then how many products do I have to help them sell? It's something like 3,000 or something like that, right? Or 300, right? So if we have to help them sell 300 of those products, that's basically 1 every day throughout the entire year, which I think is not really that difficult, of course. But now, again, that's just to get them the return or to break even. If they want to get a return, now we've got to sell 200 or 300 or 400. So it's like 3 or 4 or 5 sales a day, every single day, right? So it becomes now a little bit harder to justify, because if somebody's never had that result before, they might feel like, you know what, that's a little bit much. I'm only selling $100 products, $30,000. I don't know if I'm going to recoup that. It's hard to make that adjustment. So when you're defining who it is that you want to go after, who you want to market to, and who your clients want to be, you got to make sure that you're taking into consideration what kind of products are they selling as well. Because the higher ticket items that they're selling, the easier it's going to be to justify any price that you come up with from this formula you're about to get right now. So again, like it says on the screen, look, forget the competition. Don't use somebody else's price in your space as the bar at which you set your prices. Because today you're going to learn our predictable 4 steps profitable formula. And so what we're going to do here, let's go into taking a look. So here we want to know, part 1 is going to be all about knowing your numbers. Okay, if you don't know your numbers, you don't know how to work profits. And everything that we do in marketing and advertising and sales is built around our margins and what are our numbers and how can we predict the long-term value of our customers and what can we expect in return from those customers. So first thing we got to do is, how much money do you want to actually make? Meaning profits. How much money do you want to take home every single month? Right? This is the actual profit margin. This is what you want to take home, the end product, right? How many hours per week are you willing to work to get those profits? If you're somebody right now who's saying, I want to take home, $50,000 a month and I only want to work about 10 hours. Well, the likelihood of you doing that in, let's say, the next 5 years is probably pretty slim. So we have to have expectations for this, right? And we have to make sure that we're realistic with our approach, but we also want to be ambitious. So what is this take-home number? It's going to be different for everybody. What's your profit number? And how many hours do you want to put in each week to make that work? And again, how many hours now are you going to be spending on each client to fulfill their, whatever you're promising them, and the client session itself? Now, in our case, we're meeting with our clients either weekly or bi-weekly, and we're spending a certain amount of hours each week on our clients. So we actually meet with some clients who are we're going to build projects for, and we're going to go ahead and build out the marketing campaigns and the follow-ups, and we're going to go ahead and create the funnels and all the good stuff there. And then we have other clients where it's more collaborative, where they do a lot more of the work and we share the ideas, right? So each of those are going to be different hours per week that we're going to be using. So those are different packages, okay? So I want you to just focus on the one package that you want to sell the most of, and how many hours per week do you think it's going to take for you to actually invest in that client or that customer and to fulfill that. And again, if you're shipping out physical products, you still have time to fulfill those orders by the packing, the wrapping, right? The ship, all those things are going to go into the hours per week that you're going to be spending on your client sessions and their fulfillment that you're offering. Now we have to get to the number of clients that you can ideally work with. Well, if we just take question number 2 and question number 3 from part 1, we can actually divide those two together and get the number of ideal clients that we want to work with each week. I'm going to go with you in a true example after we get done with these 4 parts so you can see these all work together. So don't get worried, but what I want you to do is start writing down your numbers. You don't have to do any of the math just yet if you don't want to, but you want to go and start writing down these numbers so that when we get to the next slide, you're going to be able to see it in action. Now, part 3 is going to be to tally that total revenue. And very simple, we're going to take the profits, right? So the answer from question 1, part 1, we're going to now add that to the total business expenses. We're going to add that to the taxes, and we're going to add that to any future investments that you want to save for. That's going to equal your total revenue mark, okay? That's how we know exactly how much you have to hit every single month so that you can live the quality of life that you want to live. Next, we're going to go into the minimum price that each client is going to have to pay now, okay? So your pricing now is where we get to this square. We're going to divide that total revenue number by the number of ideal weekly clients, and now we have the minimum price to charge for each client. So let's go through this as it's filled out. We have, let's say in part 1, we have the $13,000 per month, okay? Let's just say you want to take home $13,000 every single month, and you're willing to put in 40 hours per week to make that happen, Monday through Friday, 8 hours, a normal kind of work week, and you're willing to give, or you think that it's going to be about 10 hours per client per week. So let's say that you have weekly meetings, that's 1 hour, you have 9 hours left that you're going to have to fulfill with the project, with the customer fulfillment, right? We're going to go ahead and move to part 2 now, which is going to give you the ideal number of clients. So with this now set up, we know that you're able to work 40 hours a week, you're going to put in 10 hours per client, that equals 4 clients each week. Now, some people would say, oh, so I got to divide that 13,000 by that 4. And that's not true, right? We're missing a lot of steps. This is where the business owners go broken backwards because they don't actually add in what we would call the adult stuff, right? No one really wants to think about taxes. It's not appealing. We try and duck them and dodge them and get off all the things that we can do to offset those wins so that at the end of the year, we're not paying any taxes, right? Or that we don't have to pay as much. And so we got to add those in though right now because you want to set aside for taxes because that's the last man that you want to be in bad standings with, right? Is the I, the R, or the S. So we want to then add in the expenses. If we think that we want $1,000 in investments, meaning that if you have a dream or you have a goal to be able to invest into, say, more businesses, you want to invest into real estate, you want to invest into purchasing existing businesses, you can go ahead and now put aside that investment cost, which is going to be put into your revenue, so that you know each month that percentage, that money for your investments is going right into a specific bank account, right? That's going to help you without having to spend that money or save extra money or put yourself in harm's way. So now you've got an investments account, and every month you're going to put $1,000 into that account. Your taxes, you have a tax account, and you're going to put in 30%, let's say. I don't know exactly where you're at in the country or what your state's rules are or laws are, so you could do some digging on that. But just to be safe and for easy math, let's say it's 30%. That comes to $4,000 a month. The way we got that $4,000 is because 30% times the $13,000, we're looking at $4,000 per month. So if we think about the expenses now, meaning the business tools that you got, think real hard about the apps you're going to use, the utilities that are going to be required for you to actually run your office, things like that, right? What are your business expenses? And then we have your advertisements, which are going to be anywhere from, let's just say in this example, $1,000 a month. Your profits we're going to be from question 1, part 1. So we have everything filled out now, and the total to that comes now to $20,000 per month. So the total revenue that your business has to bring in every single month in order for you to take home $13,000 is actually $20,000. Now, again, if you're in a normal, let's say you run a restaurant, I mean, these numbers are crazy right now, right? Because you look at this, 13,000 from 20,000, that's like 60% margins right there after you pay everybody out, after you save, after you put in for your bit. So 60% margins take home, that's ridiculous. You figure in a restaurant, you're looking at as an owner, maybe 10 to 15% return, right? Maybe if you're lucky, you're gonna get the 15%. So when you're thinking about that gross margin, you're looking at 60% in the professional services business. Now, this is a very basic overview. This doesn't include any employees or anything like that. But if you didn't have investments and you replace that with employee, I'm pretty sure you can get some part-time help for $1,000 a month, right? Some really qualified part-time help. So think about now we're going to take the 20,000 per month, divide that by our part 2 answer. So 4 into 20 goes 5. We have $5,000 per client per month that you've got to charge. Now think about it like this, because a lot of folks are going to say, well, $5,000 a month, how do I find the clients who have that? Well, luckily you're in a good spot. This academy is going to show you everything that you need to make sure that you can attract those clients, whether it be using paid advertising, using our cold call outreach method, our cold email method, doing our direct business drop-off packages. So we have you covered right now in every which way. So you will find these $5,000 per month clients, but the question comes now, can you deliver the value to supersede that amount? Typically, we like to work around the 10x rule, where if someone's going to pay us $300,000 or $30,000 per year, we want to be able to deliver $300,000 worth of results, right? If we can 10x what their investment is, and every time somebody comes to us, we could say the average that somebody gets back from our services is 10 times the return. I mean, that's incredible right now. So that's our focus, and that should be your focus too. So you've got to be able to, if you're charging $5,000 per month, that's $60,000 a year. Now you got to be able to deliver $600,000 worth of results. That's really how you want to do it. You want to say, okay, well, and the only way you can do that, imagine if you're selling to clients who have a product cost or service cost of, let's say, $20,000. Now, if you're in a market where you're like, okay, I got to get 10x what they're paying me, okay, so that's $60,000, I got to get them at least $600,000 in revenue by the end of the year. Who has product prices large enough that can make that happen without putting in a lot of extra work and having that pressure on you? Well, you have high-end doctors, lawyers, and things that where a lot of other people go to. You also have like heavy machinery workers and things like that. You have a lot of bigger named like real estate agents, right? You have a lot of people that are in another service that you can help that have products that are selling for 20, 30, 40, 50,000. And so imagine if you've got that, let's say $20,000 per, that the client of yours has a $20,000 per product pricing. Guess what happens now? If you got to sell 600,000, that's only 20 separate actual sales you've got to get for that person over the course of a year, right? And you've just helped him increase his sales by 600,000, which then goes with your 10x methodology of making sure that you can give back at least 10 times what they're putting into your business. So it comes around full circle. And I want you guys to now write down your numbers. Now, again, these numbers are going to be different for everybody. So don't think that there's an actual right number. Don't think that you have to hit this. And if you're making $5,000 a month right now from a job, think about what would it be like to make 15,000, right? What would it be like to make 25,000? What would it be like to make $100,000 a month? And really hone in on this, because this is going to be your goal. If you aren't setting up your day and your week and your month to support this revenue goal and to attract these clients, then there's nothing more that you could do, because it's not going to work, right? We got to make sure that you're focused and that you know exactly what your numbers are. You know exactly the number of ideal clients that you want to work with. How much revenue do you got to bring in each month? And then what do you need to charge each client to make sure that happens? So let's get through with this little sheet. Let's make sure you got all the numbers in there, and I will see you guys on the very next lesson.